What steps would you take if a customer refuses to provide KYC documents or information? You can say, as a compliance professional, I don't deal directly with customers, but I play a crucial role in guiding the business when a customer refuses to provide KYC documents. Under the UK money laundering regulations and FC expectations, if you're dealing with the UK customers, a refusal is not just a delay, it can be a red flag. Here's how I handle it using a structured approach. You can say step 1, support the front officer with clear communication. Often, refusals happen because the client does not understand why the information is needed. As a compliance, I ensure the front office or onboarding team is equipped with the right talking points and documentation guidelines. For example, during a UK onboarding of a high-risk offshore trust, the client refused to disclose a beneficial owner. We supported the RM with a legal explanation citing MLR requirements and FC guidelines. Once the client understood that the law required this, not just internal policy, they complied. Second approach is assess the risk and context. Not all refusals are equal. Then I review the case based on customer type. Example, we can say individual, entity, offshore structure. Number 2, jurisdiction, high risk or sanctioned. Number 3, what kind of nature of refusal it is. It is a temporary delay versus complete denial. So, in one case, a customer in the UK refused to share a source of wealth for a crypto-related business. Based on high-risk profile, we flagged this for potential suspicious behavior and placed a soft block on onboarding until further review. You can say step 3, offer policy by approved alternatives if applicable in your companies. You can say if the customer reason is genuine, for example, difficulty getting notarized documents or delay in offshore signatures, we may explore compliant alternatives like senior management attestation or board certified ownership declaration or conditional onboarding with tight timelines. But these are offered only for policy allows and the overall risk is manageable. One more thing, in one UK SME client case, we can say we allowed a declaration of UBO from the director followed by original documents within 5 business days. Win-win for compliance as well and the business. Next step, we can say escalate documents and decide final action. If the client still refuses, we can escalate the case to the MLRO or senior compliance team. Document the refusal in our KYC case management system. We can restrict or freeze the accounts. And if suspicion arises, consider filing a SAR with the UK NCA. One more example in this case we can take. In a case where a London-based firm refused to submit a UBO details and we had a complex ownership trail with a BVI entity. So we decided to offboard the client after consulting legal and filing a SAR. At the end, refusal to provide KYC AML documentation is not just an operation hurdle, it's a potential indicator of financial crime risk. Our role in compliance is to ensure the business stays informed and protected from exposure. It's about applying policy with context and acting fast but fairly. Thank you.